Yes. Another beautiful week. Some days I wish I spoke French just so I could talk about these beautiful charts. It is odd. There was nights one time. I got a little bit of wine. I sat down just as you would sit down by the ocean. And I just looked at beautiful charts. Oh, the charts. But what do we do? On Finch Week? Sorry, I'm not actually French. I'm from Texas. I get to invert this trope of the starving artist. Really wasn't much going on that I saw. Whenever I say that, though, I always wonder if it will be like when the supposed king of England said nothing of any extraordinary, out of the ordinariness had happened on July 4th, 1776. So maybe it was a big day in the markets. But I just thought this Coinbase chart was so beautiful. Wave one, wave two, and then from this low, one, two, wave three, highest high on the RSI, shallow wave four, wave five ends with momentum divergence. Wave one is complete with a one, two, three, four, five waves impulse. Then a wave two follows. So the minimum target is the length of wave one placed at the wave two low for wave three. That's about 242, and that's valid above 160. Should that be hit, and there's a way to get another target that's a little more accurate because it's wave three, and that's found by taking the 161.8% extension. It's being a little fickle with me right now. Like I said, you guys know bar chart's been giving me hell. With the length of the 61.8% retracement placed at this low is going to give the 161.8% extension of the length of wave 1 placed at the wave 2 low. I meant to say the length of this 61.8% measurement placed at the wave 1 high. That's going to give the 161.8% extension of the length of wave 1 placed at the wave 2 low. That's kind of the ideal target. That gives a level of 264, so we can see 240 to 260 be the ideal wave 3 target before a shallow wave 4 and a wave 5 higher. In Elliott wave, these 1, 2, 3, 4, 5 waves up complete this 1, 2 large wave 3. So there's a lot of upside above 160, followed by a consolidation period, more upside, and then that would end wave 3 before a consolidation period, and yes, more upside. It's a very ripe and juicy environment for these new ETFs. By the way, some trade history with Coinbase, of course. It's been very positive. It's been all positive. In September of 2023, I shared that I was taking a 50-50, really it was 2/3, 1/3 position in Coinbase, CONY, and also Coinbase Commons. I sold the Coinbase Commons for a 240% gain, and you're going to see this Coinbase video not too far away. Here it is. why I'm buying the new Yield Max Coinbase option ETF. That was for wave 3 of wave 3 with Coinbase Commons. And then I did it again. And then I did it again. So I've got a little bit of a Britney Spears thing going, but the thing is, that might not be what's really important. We look at CONY itself, no Coinbase Commons. Performs pretty damn well last I checked. Blind average test. 37.46% annualized with a monster yield. Some would say, why even hedge it? My answer would be that scale is the fastest way to cash flow. And if I'm comfortable taking a small position, then yeah, CONY itself is pretty nice. But if I want to scale MicroStrategy, YBTC, YETH for Ethereum, and Coinbase itself, as well as have downside protection, be able to sleep at night during this 24-hour crypto market, I can actually do something that's pretty interesting that really would make most of that Elliott wave stuff at the beginning of this video just art. Coinbase is a strong correlate with MicroStrategy. That doesn't need to just be said, that can be quantified. For the past 3 months, there's been very weak diversification, which in this case is a good thing, between Coinbase and MicroStrategy. The correlation is 0.44. Overlapping area represents the amount of risk that can be diversified away by holding Coinbase Global and MicroStrategy. So they're pretty correlated, but they're not perfectly correlated. And they separated, they diverged for a bit, to where MicroStrategy has really been leading Coinbase a lot. So what I told you guys I was doing a pair trade with MSTY, CONY, and FIAT all being equal weight positions. I did that for October. I'm telling you right now, I'm going to do it again for November. The reason this lets me scale MSTY, we've had MicroStrategy's earnings be a nothing burger. They're out of the way. So Coinbase can either play catch up or Coinbase can dump. In either situation, the only thing that really screws me is if MicroStrategy starts crashing and Coinbase explodes, which is why YETH is another stock that I'm interested in. Speaking of that, buying Coinbase, CONY, and Fiat allows me to take that dividend, put it into MSTY the next week, and then I can even turn around and compound the MSTY dividend right after that into YETH and YBTC. So there's really 3 ETFs to think about here, not just MSTY. They can be hedged with Fiat and CONY. So I'm going to do this again. This is going to allow me to buy more YETH and more MSTY and get an insane dividend at the end of the month. We see blindly averaging into Fiat loses just over $5 grand, 5.1K. Blindly averaging into CONY during that time. It's a little different number. Let's get the exact same number. So Coinbase makes 3.7 grand and Fiat loses less than 4 grand. Fiat loses about 3.7 grand. So they really are neutral. They really do wash itself out. But what does this do? It gives me downside exposure to scale a highly correlated asset, MSTY. During this time, we have a neutral with the delta neutral position, but it allows me to scale more MSTY, which turns $40,000 into $57,000. So all 3 of them, very profitable. What this also does is removes almost all of the downside risk, unless the correlation completely collapses, MicroStrategy crashes, and Coinbase explodes, as I've gone over. What this is also going to do is going to allow me to take that MSTY position, really build it as much as I want, and then also take these dividends from CONY and Fiat that are funneled into MSTY. Then those dividends also can go into YETH, which I really like, and YBTC. So that's some Elliott wave. Or that's actually the opposite of Elliott wave. That's called the quantitative side. It's a lot more important. The Elliott wave is that this is wave 1 and wave 2. This is 1, 2, 3, 4, 5. Wave 1 and wave 2 at the 61.8 to 78.6% retracement. Above 160, I'm looking for the 240s to the 260s to be the next wave 3 target before a shallow wave 4 and a wave 5 higher.